Market rallies on inflation data, but more inflation ahead and banks back on the ropes. Here's what you need to know before the bell. As we noted yesterday, had inflation come in a lot hotter than expected, well, we would have seen a decline in the markets. And we said, well, if inflation comes in pretty much in line, markets will kind of do And that's pretty much what happened. Markets traded both positive and negative yesterday, wound up in positive territory on that inline CPI inflation report. Today, we have the producer price index, another inflation read markets are going to be looking at. But this morning, what's dragging futures lower early on is, of course, concerns over PacWest. Back to the banking issues, more deposit flights out of these banks. That's putting pressure across regional banks, Comerica, Zions, PacWest, all those banks under pressure this morning in the financial sector, weighing on futures here a bit. But again, markets continue to really ignore the risk overall. Yes, markets will be down slightly this morning at the open. NASDAQ still positive, so look for some flows into technology stocks this morning. That's been the safe haven play this year so far. Markets really remain confined right now to this trading range that we've been in really for the last month or so, and really going back to the peaks of the market in February. That rally in January was pretty much on this idea that China was going to start flooding the system with liquidity. That really hasn't happened yet. And since that period of time, the monetary impulses have not shown up in the markets. Markets have continued to trade very range bound here, but there are evidences that we may start to see some improvement. The NASDAQ breaking out of its trading range lately. The S&P 500 remains very close to a breakout here of this consolidation range. As we discussed yesterday, the market is going to make a defining move in one direction or the other very soon now. We've had a very long stretch of time where markets are very tightly range bound. You're going to get a breakout one way or the other. Whatever way it breaks out, we're going to get a fairly significant move from that point. So as we get closer to breaking out of the top of this range, that's building a bit more of that bullish momentum, that bullish enthusiasm of the markets. Despite the fact we're right now still on a sell signal, that sell signal still remains fairly elevated. So if we do get a breakout to the upside, again, we'll get a decent move higher, but that move higher is likely somewhat range bound because of the fact we haven't really had a good correction here in terms of giving price momentum a cooling off. And that's one thing that we'll have to be dealing with as we get into summer months. Again, a fairly defined rally at this point, very concentrated in technology, discretionary, and really communications. Big laggards this year, of course, energy stocks as well. So again, those three areas really kind of driving the markets. A lot of money hiding in that area right now because of these other concerns, recession risk, employment risk, all these type of things certainly weighing on markets. But the markets continue to drag inflows into a relatively few number of stocks supporting this rally. Will that change eventually? Probably. But again, right now we just have to trade the market we have. And that's the big question, is really what is going to be that next shoe to drop. I'm your host, Lance Roberts, and this is what you need to know before the bell.